Let's get right into the stock charts this morning. Welcome everyone. If you're new to the channel, we use technical analysis to find trade ideas. I'm constantly pointing out different ideas, different setups, ideally before the trade happens so that you can take action on the trade if it shows up. Now, trade setups are not actionable trades. We need to find triggers or reasons to enter the trade. Oftentimes that's going to be a break of trendline support or break of trendline resistance. But we look for the trade setups before the trade, before we get a trade trigger, so that when that shows up, we have an opportunity there. So let's get right into it. We're going to start out with the broad market analysis. Nasdaq futures is what I'm looking at here. You can see we're just kind of drifting sideways right now. We had a bearish rising wedge on this hourly chart recently, and that bearish rising wedge did come with negative divergence on the PPO and the RSI. So it was indicating we were going to break to the downside, or at least break the wedge. Right now we are ultimately just correcting sideways. You can see we broke right here and then we're just drifting sideways. So as of right now, I need to see a break of that lower support line. You can see it. I have it kind of marked out right there at about 15, it's about 15,549.75. Today they sold it right down, undercut it a little bit, and then the dip buyer stepped in. So again, if you're looking to short the market, you always want to be on a watch for the dip buyers, especially at the beginning of a downtrend, a downward move. The dip buyers they're going to show up until they get burned. So you always want to be on the lookout for that. So we didn't have a really impulsive break of the Nasdaq futures. Let's go to the SPY futures. You can see here kind of a drift lower on the SPY futures. Not much though, I'm just not seeing impulsive selling, so I don't have much to go off of right there. Let's look at the triple Qs. You can see triple Qs. We now have what looks to be kind of a support line right there. And I would say an hourly close below 379.20. The bigger the break of that level, the better. So you want to see an impulsive breakdown, not just a small little close right below that level. You want to see an impulsive break. Then that should set us up for the downside. Until then, market's likely going to, hold up or drift sideways. And then the SPY futures, just the SPY. SPY did have this support line right here at 450.92. You can see we did break it just recently, and we're kind of chopping around, but the tech sector hasn't broke yet. So you really want to see both those go, SPY and Qs break, before we see any kind of downside move. Other than that, we're just looking at the daily chart, really just kind of drifting sideways. I would say sideways to a slight lean to the upside, but with big negative divergences that have been extended for quite a while on the daily chart. Here it is on the SPY. Momentum has been just dropping off. You can see even just recently on the PPO, as I zoom in, another confirmation right there of a negative divergence. So we just had another one right there where momentum's not able to really make new highs, and yet price continues to grind higher. So that's indicating we're likely going to get a big correction soon. But again, these negative divergences can build for a while. They're not a reason to short. We need to see breaks and sell signals and big impulsive breakdowns in the price action to trigger our entry. We just don't have that yet. So this is just extending this negative divergence, really going for quite some time now. And so we're waiting for breakdowns. The one thing I'm looking for, and I just don't think you're going to get a breakdown or a sell signal in the markets until you see these FANG stocks break. And this is what these have basically been what's holding the market up. So Amazon's gone sideways really for about a year now, and it's right at resistance right there at 3551.70. So a break above that would be bullish, and a rejection here, which is what I would expect, would just be continuation of the sideways pattern. Now, until we break out of this range, Amazon's just stuck in the mud, so nothing there. Google has just been uptrending in an upward price channel. We've been kind of walking on the upper end of this price channel right here, and I don't see any kind of breakdown. So until you see a break, a big impulsive breakdown like that, then it's just going to continue to hold up the market. So nothing, no triggers or anything there in Google. Microsoft, more of the same, just kind of working its way higher, grinding higher. And Apple, Apple's selling down today, but in general, no technical breakdowns. So until I see, for Apple, I really need to see this 144.40 go. That was former resistance right there. And then it's been support, and they held that support. So unless that goes, no real sell signal on Apple. Facebook's been continuing to work its way higher within a bearish rising wedge with negative divergence. So Facebook is set up for a downward break, but until we see a break of the lower trend line like that, no sell signal, and we're just going to continue to grind higher within the wedge. So those FANG stocks continue to hold up the market, and that's really all I see. Until those go, the market's not going to break. Okay, a couple short ideas. This is Abercrombie & Fitch, ANF. I did cover my trade this morning. We ran right into the 200-day moving average, usually on that first tag of the 200, especially in this market with the dip buyers just constantly showing up. You would expect that it's gonna bounce off the 200-day, and that we did get a slight tag of that. So I think we probably could run up and maybe hit resistance now up at 37.03. So I covered that here. Not so sure if I'm going to get back into it. We'll see what the general market's doing. But all in all, really good trade. We entered the trade right here on the back test of this broken trend line. Here's your trend line right there on ANF. We had negative divergence right there up at the highs. We broke, and we had a back test. And this is where I entered the trade. When I saw that it was back testing, I entered that. And basically that was about a 26% gain in a matter of, that was back in June. So couple months, 2 months or so, 26% gain in that one. So I'm done with that one for now. And it's the same thing with this American Eagle. I covered that one the other day, covered it right here. And that was a gain of about 21% or so. So both really good trades in these retailers. Going back to Abercrombie, we did make a new low right here in this recent pattern, but we're starting to do it on higher momentum. You can see right here. Now that's bullish divergence basically. Now it's not confirmed. Let me get rid of this one. Not confirmed yet because they're still pointed down. But if this start to turn up, these momentum indicators, then that means we've got a divergent low. And that's a divergent low, that would be a divergent low with bullish divergence basically hitting the 200-day moving average. Looks like a good spot to cover a short, especially because the general market's not breaking down. All right, so we kind of have to pick and choose these shorts within this kind of this market because we're not getting broad-based market sell-off, but to get these 20% drops in a market that is continuing to move higher, I think is pretty sharp in general. So those worked out pretty well. Okay, flipping over to gold. So gold continues to look like one of the better long setups, and these gold miners look like one of the better long setups. Remember, gold and these gold miners have been in a pretty good correction for quite a while. So, we look to buy the things that are correcting right when they're about to possibly change trend. Gold bullion, you can see here. This is the bull market. I've got it marked in green in gold. It really started all the way back here in 2015, but didn't really create a solid trend until we hit this pattern right here. So you can see we held support there, held support here, and then recently we undercut that support. They shot it down, but it bounced off horizontal support down there at 1682, and then shot right back up and recovered that trend line. Today, you can see they dipped it right below there, that trend line, but then recovered it, and so far we're trading above it. So support is holding as of right now, and we also, this was your last divergent low right here. When we broke down, we hit that 1680 in the Sunday night session back then. We did it on bullish divergence. See the momentum, how it's moving up, and we made a lower low in price, but a higher low in momentum. So bullish momentum, drop in price, that's your last divergent low, recovery of the support line, and so far the buyers continue to hold this support. So I think we're probably going to get a move here pretty soon to the upside where we're going to break. We need to see a definitive break of this resistance line, which is really right here at 1833. You can see all the reactions we had, 1, 2, 3, 4. So that's the resistance right now. You get a break above that, and likely we're starting the next uptrend in gold. So I still like it. I still think it looks good. The miners in general are kind of just hanging in there, just kind of grinding along support. Here's Newmont. You can see just hitting support again today. And so it's just kind of grinding along support. And a lot of them look very similar to that. AEM, you can see just kind of grinding along support. But recognize that they're grinding along these support lines, making slightly lower lows in price, but they're doing it with bullish divergence. So here's your bullish divergence. See the RSI and the PPO, how it's moving up. That indicates to me that we're likely consolidating, building a base of support, and then boom, it's going to go like that. I don't know when that's going to take place, but that's what this, it tells me there's not much more downside. We're going to, we can continue to kind of drift lower, slightly lower, and, but keep that divergence, and then eventually we're going to break to the upside. So this is the zone of consolidation as far as I can tell for a lot of these, and that's why I've been building positions, going, buying these miners over this time period, waiting for that next move to the upside. Here's Nike. I haven't talked about this one for a little while. We continue to drift to the downside. So as far as I can tell, we had this uptrend line right here with clear negative divergence. See the momentum, how it's just downtrending and dropping off as prices continue to make new highs. I've got it circled. These are all divergent highs where you're making new higher highs in price and momentum is dropping off. And then we broke the trend line support. So there was your sell signal. That was your short right there. And ever since then, it's just been selling ever since. We could, we're probably not going to just completely drop and fill this gap. I think we're likely going to get some bounces along the way. We have the 200-day and some support levels to watch. But as far as I can tell, we're going to work our way lower down to 146 and then probably fill this gap at 134, 135. So that trade still looks good for more downside to come. And we'll wrap up with KHC. Guys, if you're new, leave me a thumbs up and check out my stock market technical analysis course. Link in the description below. I go through all these concepts in about 4 or 5 hours of video trainings. It's a pretty good course. It's 99 bucks, so I priced it. It's very affordable to all. Here's KHC. Again, this is a long idea I talked about. Now, again, you can see here, we're getting a pretty impulsive day today, breaking to the upside. However, we have this downtrend line I'm watching. I'd like to see a break. I'd like to see an impulsive break out of that or above that. So let's see how the day closes. KHC, again, has bullish divergence. You can see right here, we're starting to build that bullish divergence on the RSI, and then the PPO it's kind of starting to show up right there. You can see it on the hourly. There it is. See how the momentum is kind of moving higher on the PPO, and yet price continues to work its way lower. Today, looks like we're breaking back above this resistance line. So this was your former gap right there at 35.95. Big gap right there. We've been in a bear market. It was in a bear market ever since. Recently, though, it recovered that. So there's a big breakout recovery, and it was off to the upside. Now we're coming down, and you can see we came all the way down and tested that again, undercut it just slightly right there. There's the undercut of that key level of support, and then today, big ramp higher. It's pretty bullish, that candle. So, a couple ways to play it. Let's see how the day closes. But if they just continue to buy this up, I would consider that a buy signal. And that was likely the lows. And then we're going to continue to work our way higher. I think the move here to the long side is probably a gap fill all the way up here at, let me grab the right tool. But it's all the way up here at 47.86. You can see that's where that gap was. We have not filled that gap. Came close and then it sold down. So if it wants to hold support here, I think it's likely we're going to move up and fill that gap. So in general, I like this one. I'd like to see the day close, and tomorrow, if there's more buyers tomorrow and it continues to move higher, that's your buy signal, I would say. And we're likely going to go fill that gap in the near future. Okay, guys, that's all I got for right now. If anything comes, shows up in the markets throughout the day, I'll put out a closing market video. Catch you guys on the next.